December 20th, 2023, micro crude oil futures. That's the ticker where I'm flashing my cursor. 1 minute chart. I'll show you my trade. It's today in this contract, and I'll show you the waves, and I'll show you the targets and the gaps. So in this section right here, if you watch my previous videos, I talk about poor structure. So poor structure is where you have no overlapping candles. So this 1 minute candle opens here, closes here, and then you get another 1 minute candle open here, close here, and then you get all of these overlapping candles, and overlapping in terms of price. So this is creating good structure, whereas this is poor structure. And this is pre-market. So price then bounces up and out of this and retraces all of this poor structure. So price retraces the poor structure and creates gaps as it's going up. So here I'm going to draw a line in here. So the cyan wedge indicates there's a gap between these two bodies. I'm sure you can see it. And here's another gap right here. Now I'm going to check this gap. I'm going to zoom in and check this gap to make sure that this candle low doesn't touch this candle close. So the close of this candle is 74.78. I don't measure tails and wicks when I'm doing gap analysis. I only measure bodies. So here you can see that this candle closes here, this candle opens here, and there's a gap between these two candles. That's why you get the cyan wedge. The same thing here. And then you get the wedge here, this orange wedge, because this candle close, this doji candle close and open is essentially above this candle open. So this candle close is at 74.78, and the low of this candle is 74.78. So this does come down and essentially fill this gap. So I'm going to remove this line because that gap is filled. So the only remaining gap we have is this gap right here. And we have what's very important on this trade is that we have this poor structure. So this candle here, so if we look at the top of this candle and just move left, we have poor structure all the way from, we have poor structure all the way from the top of that candle here all the way up to the bottom of this candle, and that's also poor structure here, and it's poor structure here. So I'm just going to draw this poor structure zone, and then we still have that. I drew it a little bit lower, but just so you can see that yellow line. Okay, so I'm going to scroll to the right, shrink this up a little bit, and then I'll start talking about waves. So here's the high. So this was a target for me, this poor structure area along with this gap. Price moves this morning, and at this point you can see I'm interested in taking a short back down to fill that poor structure area and that gap. So this, I think this is a red candle, this is a red candle. Red in terms of the script is plotting these red. I take the short. My stop is 1 tick above this candle here. So you can see I got a 10-cent stop out on this trade. Price goes up, throws in this upside down hammer candle, and it also gets plotted as a red candle. I take the short on the next candle where price is, it's actually a bullish candle, but I go ahead and take the short. My stop would be 1 tick above the signal candle, and price starts to move down. As price is going down, gaps are created. You see that I'm going to zoom in. You see the gap, the orange wedge. So there's a gap between these two bodies. So, whoops, got to get my right line tool. So there's a gap that gets created here. When price leaves a zone, you want to see gaps get created. So gaps can be targets to be retraced later and filled, but when price is leaving a zone, you want to see gaps. So price comes down, creates another gap between these two bodies, and I'll highlight this gap right here. So the close of this candle is 75.25, and the high of this candle is 75.24, high of this candle 75.24. So these two candles right here, these two wicks, are 1 penny away from filling this gap. The tail on this particular 1 minute candle I don't count as a gap fill because I need to see at least two candles filling the gap, not just the adjacent preceding candle. So price moves in waves. So we'll start here as wave 1. How am I counting this as wave 1? I don't know that this is the high of the day, but in retrospect, we know it's the high of the morning, at least right now. So I put in a wave 1 here. Price goes down, bottoms out. You get a close above the previous candle. And so that's a signal that price is either slowing down and reversing. Here we get candle body over this candle body. So this can signal the end of the wave and then a move down to wave 2, or price continues to go up and you don't know that you're at the top of the wave until you see basically candle bodies closing below. So here this candle body is closing below the previous candle. That's a good indication. It opens with a gap, and then this candle also closes below wave 2 body. In order for wave 2 to be completed, you need to see candle bodies closing below candle bodies fully under the previous wave candle body. Once again, I don't measure wicks, I don't measure tails. This is body to body analysis, except for when we get to wave 5. So price continues to move down. You get a signal candle, candle body over the previous candle body. It's also a signal candle. So this is where price has stopped downtrending and is going up. We now document this as the bottom of wave 2. Price will bounce. You don't want to see price bouncing over the previous wave high. So we don't want to see price going over wave 2 in this particular example. Price goes up, slows down. We get a close below the previous candle, just as we get a close here, but we now have even a lower close. We need to see price coming down. Price reverses one more time. So this was the red signal candle. I've highlighted it as a wave 3 red text here. Why? Because price went a few ticks higher. You can see the high of this candle here is 75.15. The high of this candle here is 75.16. So it went 1 penny higher. It's within the 10-minute time frame of the script. So then this candle gets plotted as red. Price goes down, consolidates at the bottom of this candle here. This candle only retraces about 40% of this body. So this candle body only retraces about 40% of this candle body. So I'm saying this is essentially consolidating at the bottom. You now need to see price closing below previous wave 2. So right here, this candle is closing at 74.95. This candle, the bottom of it would be the open, was 74.95. So they're parallel. So this is not a wave 3 end yet. Price goes down. So this candle body, this green candle, opens at 74.94. This, remember, this one opened at 74.95. So now there's a gap between this one and this one. The candle closes here. So this is good. This is candle body under the wave 2 candle body, and this can terminate the wave, and it does, as you can see. But how do we know the price has stopped going down? Well, you get this 1 minute candle. That really means nothing, but here the second candle closes above the previous candle. So now we document this as wave 3 bottom. Price continues to move in waves. Price moves all the way back up to the top of wave 3. The high of this candle is 75.16. The high of this candle, 75.16. So price isn't breaking the previous wave high. It comes all the way back up to it. You really don't want to see this type of retracement. but you have to expect it. And sometimes price will just wick right above, like it did here. It wicked 1 penny. This wave 3 wicked 1 penny above the previous wave 3 high, which made it invalid and started to move down. Here, this one just goes to the top of wave 3. Another signal candle. How do you know prices now? At this point, how do we know prices stop going up? We don't. We need to see candle body closing under the previous candle body. So as all of these closed higher and higher and higher, this one closes lower. This 1 minute candle essentially consolidates. In 1 minute doesn't seem like much consolidation, but if you're a day trader, it is. So this candle body basically consolidates at the bottom of this candle body, retracing maybe only at just a few percent of the candle body, and then proceeds to move down. So in order to be a wave 4 completion, we need to see candle bodies under the under wave 3 candle body. So we get that right here on this little doji. Looking upside down hammer, this is candle body under. This can be the termination of wave 4 if price starts going up. No, price continues to go lower, and then we get the price consolidating and moving up. So at this point, when price goes above this particular candle body, this one, the one that's filled here going above, we know that that's the end of wave 4. And for wave 5 to conclude, we need to see at least a long wick, a tail below wave 4, or a body. Here we get that body, wave 5. So this is the wave 5 down. Let's go back and talk about my trades. I shorted here on this candle, thinking price was going to collapse at this point. Put my stop 1 tick above the high of the morning, got stopped out. Another signal candle, got short again, put my stop 1 tick above, set my limit order to fill right here on this, right at this yellow line, maybe 1 tick above. And once again, the whole premise for this trade was poor structure on this candle, immediately retraced with poor structure here and creating a gap. So that's my trade in crude oil for today. I will talk about typically what you will see often after you have a 5-wave move, you will get a 3-wave reversal. I've documented that here as well. So if we're going to get a 3-wave reversal, you will see this happen. And I've documented it here with these cyan text. So this is what was wave 5 becomes wave 1 bottom. Wave 1 goes up. You get the pullback. This is candle body, under candle body. Wave 2 begin. Wave 2 up. This is candle body over wave 1. You get the pullback. I've indicated this one as red because the price actually does go higher. So wave 2. Made a mistake here. This wave 2 is a failure. Why is it a failure? I will show you. Just let me change the color on this. Tried to get this set up before making this video and missed one. And duplicate drawing. This becomes wave 2. Let's see. This becomes wave 3. This becomes wave 4. And these are all cyan color because there's no failure. Even I get confused on this at times. Sorry for the delay. Okay. So we'll start back here at wave 5 bottom becomes wave 1. Price goes up. You get candle bodies under wave 1 high. So you know price is no longer going up. You get a bottom. You need to see price going over this candle. It does here. So now we know price is no longer downtrending. This becomes wave 2 bottom. You need to see candle bodies closing above wave 1. We see that candle bodies are now closing above wave 1. keep going. And then here on this candle, you get a gap between these two. So this kind of small body candle becomes wave 2 top. You get the pullback and the gap. So price is no longer going up, it's going down. Oftentimes gaps are just, or pullbacks are just 2 minutes. And this was classic 2-minute pullback. Price continues to go up. This candle body, this small candle body right here, even though it's not higher than the previous one, this is candle body over wave 2. And that concludes the wave 3 high. And then you get a pullback. So the wave 3 does get violated here by this wave 4. So this is the bottom of wave 3, but wave 4 goes lower. So just as wave 3 here went and violated this wave 3, wave 4 violates this wave 3 with lower lows and lower candle bodies, as you can see right there. And then wave 4 pushes up. So typically I don't expect a wave 4 move. However, what you can see is there's still poor structure through here. Right above in this section, there's poor structure, and there's poor structure through here that already got retraced. So this can be a target for you, along with gaps above, since oil's been in an uptrend for the last few days. Hope that helps. Hope it's valuable. Thanks for watching.